Here, Policy Pod, everybody. I am Brian Morgenstern here with the great Sam Lyman. Lots to talk about when it comes to Bitcoin today. Where should we start?
We should probably start with the price action because it's been a pretty rocky week, right? It was just last week that we were celebrating Bitcoin's all-time high. And I think I was feeling pretty bullish at the time, speculating, oh, how many more times will we be celebrating the all-time high? And I think I probably cursed the market because right after that, we had a pretty big correction. We actually had about a 15% correction this last week. So last time we filmed, we were just touching about $74,000. Now we're middling in around the $65,000 range. So this is, for a lot of people who are new to Bitcoin, probably a shock to the system. But Brian, what do you make of the current price correction? Is there a reason for panic? And it'd be great to get your thoughts on that.
Yeah, welcome to Bitcoin, everybody. Get used to it. There's always volatility. This is actually pretty light in terms of a correction at this point in a halving cycle, whereas the halving happens every 4 years. Over the last, I think in history, what I've been seeing is that around a 30% correction at these times in the cycle after an all-time high heading into a halving is not totally unusual. That actually would be fairly normal. So the fact that we had about a 15% correction after hitting an all-time high is, I would say it's no reason to panic. I would again go back to the charts where it shows the value of a dollar due to inflation, shrinking some 30% or something over a decade, whereas Bitcoin has gone up some 5,000%. So the chart, the graph, if I can make my hand look like it, looks something like this. Like it goes up, down, 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 up, down, 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 up, and it always tends to achieve a new all-time high in fairly short order, particularly after a halving. What our friend Pierre calls the enlightenment portion of the cycle. We're going to have the supply shrink. We're going to have continued inflows into ETFs. We're going to have continued adoption of Bitcoin around the world. And that's a recipe for a higher price over time. Bitcoin has proven to be a store of value. Of course, transactions, are happening in various places, but it has been more primarily a store of value. And that's because over the course of time, it goes up. The trajectory is up. So this sort of a correction, I would say, is not really anything to worry about. It's not unusual. And in fact, it's smaller than past corrections at this point in the cycle.
Yeah, to your point, Brian, it's smaller than past corrections. In past bull cycles, we've had multiple 30% corrections throughout the cycle. So this is probably just a teaser of more corrections to come as the cycle continues. So something I wanted to point out is some people are panicking, seeing a 15% correction, but one who's not panicking are the whales. And to that point, Dylan, if you could bring up the most recent graphic that we have. So this is a graphic that shows whale accumulation. So whales, for those who are new to crypto markets, are large holders of Bitcoin, the Bitcoin OGs, if you will. So if you look at this chart, the whales accumulate when they are most bullish on the markets. And when you see the whale accumulation peak, that usually also marks the top of the markets. When they start selling is when you should be concerned. When they start buying, though, it could be a buy signal. And of course, I need to preface all this by saying none of anything that Brian and I say today is financial advice. We're about as qualified to be financial advisors as Hunter Biden is to be a life coach. So, so don't take any of that as financial advice, but we just like to show the data that's out there to give people a full picture of what this market is like, especially if you're new here. So, Brian, I also want to ask you as well, a lot of times Bitcoin's critics will see its volatility, such as the 15% correction we had this last week, and they'll say, see, I told you so. This isn't a store of value. How would you respond to that criticism?
Yeah, it is a store of value similar to other assets, other commodities. Precious metals and the like. These things don't stay constant, but over a life cycle, they go up. So I think that anyone expecting the price to go only up every single day needs to adjust their expectations. Over time, it's going to go up. It has gone up since its inception. We believe it will continue to go up, particularly with the market dynamics I described, with shrinking supply and increasing demand. So I just think, picking any given day and measuring Bitcoin on that basis is not the intelligent way or fair way of evaluating it. It's a store value over time, and over time the trajectory is up and up and up.
I agree. I think the theme with Bitcoin is always to zoom out. If you're looking at a 1-day chart or a 4-hour chart, you're going to panic. But if you zoom out to look at a 1-month chart or even a 1-year chart, you'll see that the trend is always up and to the right, or at least has been historically. I think as well, gold bugs often levy that accusation that Bitcoin isn't a store of value because of its short-term fluctuations. But to that point, Dylan, would you mind bringing up the other chart? So what people don't often recognize is that before there was Bitcoin, there was gold. And gold had some crazy volatility throughout the 20th century, particularly in the 70s. So what we have here is a chart of gold's price in the UK in the 70s. And if you look at it, I mean, that doesn't even look like a Bitcoin chart. That looks like a meme coin chart to a certain extent.
Yeah.
You've got the Burj Khalifa formation with the peak and then the sudden crash. And you just have wild speculation as to what the value of gold was at a time that it was becoming a globally accepted store of value. So obviously things leveled out in the 80s, 90s, and 2000s until today, where oftentimes gold is seen as boring, as completely lacking in volatility. Now, it's kind of sad to think, or maybe it's a good thing to think, that actually could be Bitcoin's future. It's a maturing asset class. I would say that it's in its teenage years right now. So just as teenagers have mood swings, Bitcoin has mood swings as well. And hopefully they'll get less intense over time. So a crazy week in terms of Bitcoin's price action, but for those who've been around for a while, a pretty typical week as far as Bitcoin goes.
I think that's about right. And, as long as we are comparing it to gold, we've discussed that if Bitcoin hit parity with gold, that would be somewhere in the neighborhood of $600,000 per Bitcoin. There's obviously a lot of room for more adoption of this asset. And if it did say, 10x from where it is now, I wouldn't be that shocked. If that happened over the next few years. It won't happen overnight, I don't think, but over the next few years, as more and more people adopt it, as pension funds bring it in as a portion of the portfolio, you have a multi-trillion-dollar market that I think is going to start kind of demanding some exposure to Bitcoin, some level, and I think that's going to continue to put upward pressure on the price. And like I said, if we were to hit parity with gold, it'll 10x from where it is now. We'll see what happens, but I don't think that's an unrealistic thought or prognostication.
I'm with you. And I think Kathy Wood of ARK Invest is with you as well. She's been as bullish as to predict a $1 million price for Bitcoin in the coming decades. So there's a lot of room to grow still, and we'll be with you all every step of the way. Now, moving on to our next topic, energy abundance. Energy has been very much in the news lately. In fact, the New York Times recently ran a story that speculated that the world, the US in particular, will need a lot more energy in the coming years just to power our economy. Brian, can you walk us through sort of the contours of that story and where you think Bitcoin might have some challenges going forward as energy becomes more and more of a hot topic in our political and policy debates?
Yeah, I mean, my take on this topic broadly is that there are sort of competing mindsets in the public policy space. Where we are in Washington, D.C., is the Biden administration appears to be exploring ways to limit certain uses of electricity because they're worried that we're not going to have enough power in the future. The fact is, we do need a lot more energy in this country. The governor, lieutenant governor of Texas, and Larry Fink, the CEO of BlackRock, held an event where they talked about how much more power we need. I think the governor has, projected we need something to like doubling our energy over the course of a decade or so. But we need an all of the above kind of approach to pursue energy abundance. the Biden administration, at least so far, has signaled that it is more inclined to espouse a scarcity mindset and choose who's allowed to use electricity and who's not. And it's said that, AI data centers, Bitcoin mining data centers, among others, are causing problems by demanding more energy, and that's going to lead us to, a scarcity problem, I think, moving forward. I sort of reject that way of thinking. We need more power, and we have it in this country. And if we were to avail ourselves of all the natural gas available to us, we could increase our power production dramatically. I think we should do that. The state of Texas is working towards that. They just put through a referendum to make financing easier for natural gas plants. I think nuclear could provide us with energy for generations if we could get more nuclear plants online. Now that they take forever and they're expensive, but you got to start somewhere. Nuclear fusion is something that's been in the news lately due to some recent developments. I think we're still, a decade or more. We're always a decade away from nuclear fusion, I guess. But if some of these other solutions were to come through, then which I think they should, then I don't think espousing the scarcity mindset is a good thing. Just as a matter of freedom in the Bill of Rights and being fundamentally American, I don't like the idea of government agencies deciding who can plug into an outlet and who can't, or, deciding that one use of electricity is acceptable and another is not. There's also a cognitive dissonance when you think about the fact that the administration wants to electrify everything. They want you to drive an electric car. They want you to get rid of your gas stove and have an electric stove. They don't have concerns about the strain on the grid with regard to those particular uses of electricity. And yet they're saying, oh, but data centers, are the real problem. I don't think the government should be that much in the business of value judgments in terms of, end use of a commodity like electricity that can be purchased in an open market. I think that's a recipe for an Orwellian future. So my preferred solution, I think the way the U.S. government should be thinking about this, is an energy abundant, energy dominant future. There's also just the geopolitical reality that, we see what's going on in Ukraine. Look, President Trump warned Germany and some of the Western European countries, if you're dependent on Russia for your LNG, you're going to have all kinds of problems. And the secretaries of energy when Trump was president were basically LNG salesmen to our allies so that they didn't have to get it from more hostile powers. I think we should return to that. I wish the Biden administration would do it. They've signaled that they don't seem to have any intention of doing that. They've signaled the opposite, that they actually want to limit LNG exports. I just think the world needs an energy abundant future. In particular, the United States needs one, and not just because we're a wonderful first world country that expects to have electricity whenever we want it, but also to ensure a more secure and safer world. So I don't know. Those are my thoughts on that.
Yeah. It's interesting as well because the Biden administration is very focused on renewables and green energy at the expense, of course, of carbon fuels. Do you think that sometimes that fixation on renewables can actually get in the way of creating an energy abundant future?
In a way, it can. Like I said, I think an all of the above approach is a good thing. Just anecdotally, I would tell you what we've observed in Texas is that they have abundant wind and solar. However, it is intermittent, number one. So it's available when the sun is shining and the wind is blowing, but peak demand for electricity is usually at the end of the day when people come home from work and they want to turn on their TV and they want to turn on their air conditioning and their home heating, depending on the season. That's when spikes in energy demand happen, when the sun is going down and generally when the wind is slowing, which means that power is not actually going to serve your peak demand scenarios. And you have to build an energy grid to satisfy peak demand. And so wind and solar are not particularly helpful in meeting peak demand, which means we still need other sources. Maybe at some point in the future, we'll get to a place where batteries are advanced enough to store the unused wind and solar until that energy is needed and can be deployed. We're just not there right now. And so to the extent resources are being expended on, interconnects and transmission for wind and solar, those resources are not being spent on dispatchable load like natural gas, which can be used at any time, including during peak demand. So I don't know if I'm prepared to say that they are like in the way or preventing something, but you could make the argument. And I think certainly the most important piece is that you have to have a grid that can satisfy peak demand. And to do that, the load has to be dispatchable. And at this point in time, wind and solar are intermittent and they're not there. So we need to pursue other avenues to meet that peak demand.
All of the above. I'm in agreement with you. I think this is the issue, and this is where things get dangerous. Renewables are great. We all want renewables and cleaner energy. Who wouldn't want that, right? But when you pair a fixation on renewables with a scarcity mindset, I think that's when things get really difficult. The problem with the scarcity mindset is that it is focused too much on the present. At the beginning of the 20th century, people said that the greatest environmental problem facing the world at that time, interestingly enough, was the accumulation of horse manure in major cities, right? In Berlin, New York City, Paris, you had just mountains of horse manure piling up in cities because the main transport at the time was horses and carriages as well. And so they even formed international committees to address this pressing environmental problem because there were dire predictions being made by major publications at the time that the world's major cities wouldn't even be inhabitable within 50 years because of the accumulation of horse manure. So people were wringing their hands over what to do about this issue. Now, if you were a leader at that time with a scarcity mindset, your solutions would have been putting a quota on the number of horses that could come into the city, or potentially levying a horse tax or a manure tax, something along those lines. And that mindset keeps people so focused on the present and the technologies we have at hand. So what actually ended up solving this issue of the accumulation of horse manure in cities, it was the invention of the automobile. The automobile made horses essentially unnecessary in our cities. Pretty soon, the automobiles, and then with electrification, metros and subways, they took over our cities, and you no longer had this problem. That problem was solved overnight. And I think that's what our leaders are missing who espouse this scarcity mindset. The solution isn't to focus on the technology we have in the here and now. The solution is to focus on the technology of tomorrow, the things that we can build today, as you mentioned, nuclear, both fusion and fission. I think there's a lot that we could do there to build out this energy abundant future because we know we need more. The problem with that scarcity mindset is, no, we only have a fixed amount of energy. How are we going to distribute this in a way that's equitable for our political desires? And that is going to be a complete disaster. It's going to erode our freedoms, and it's going to be terrible for the economy as well. But if we can focus on building new technologies that make more energy for everybody possible, I think that's the path going forward. So energy and compute, there's a real intersection of those two things. And on this front, we actually saw an interesting interview this last week that Lex Friedman did with Sam Altman, where Sam Altman, who is the CEO of OpenAI, talks about compute and the amount of compute that we'll need in the future. Dylan, would you mind playing us that clip?
I think compute is going to be the currency of the future. I think it will be maybe the most precious commodity in the world. And I think we should be investing heavily to make a lot more compute. Compute is... it's an unusual, I think it's going to be an unusual market.
Okay, a fascinating exchange there where Sam Altman says compute is going to be the currency of the future. Some might argue that in a certain sense, it's the currency of the present. Bitcoin requires huge amounts of compute to maintain the monetary network. And so if there's going to be a competition both for energy and compute in the future, that obviously has interesting implications for Bitcoin. So Brian, what do you make of this? If compute is going to be the currency of the future, how might that affect Bitcoin as a global monetary network?
Well, I think just as a table setter, it's, our some of our friends talk about Bitcoin as the convergence of energy and money, or money being represented, a representative of one's energy, of one's work. Hence the term proof of work to describe Bitcoin mining. I think I'll just talk about kind of the real world that we're living in right now. I agree that computing power is going to be precious. It is precious now, and it will be in the future. And so I think there's a bit of a scramble for land that is conveniently located, generally in rural areas, but near large power supplies. The sorts of machines and chips that will be needed to run the data center facilities of the future. Of course, the construction crews and permitting and communities willing to kind of accept these facilities. Really, really fierce competition has already started. I mean, there was a story in the New York Times fairly recently, maybe a couple months ago, talking about a data center facility in Wyoming where there's a Bitcoin mine, and Microsoft had written a complaint to CFIUS, the Committee on Foreign Investment in the United States, the federal government interagency committee, and Microsoft wrote a national security complaint about the Bitcoin mine, which I believe was owned by a Chinese company. Because, I mean, me reading between the lines, this might not be totally correct, but I surmise that it is correct that, Microsoft would love, they simultaneously submit this national security complaint to CFIUS, which is not really a thing, but they did it, and simultaneously gave it to the New York Times. How convenient. Because I think the desired result was to kick that operator out of that facility to take their compute, because Microsoft also has a data center near that site and, of course, would love to expand and get more power. They want to take that power to expand their own computing capacity. I think that's just one anecdote, but it's sort of a microcosm of, I think, what's happening and was going to continue to happen, which is the expanded need for compute. And Sam's right. And guess what you need for compute? All the things that I just mentioned, but more power. We need more electricity in order to serve that economy of the future. And so this conversation is very relevant to the previous one that we just had about how much power we need. I think it's an insightful comment. I think it's an interesting way of thinking about it, and I generally agree with it. I think Sam's right.
And I think on a global scale, the potential geopolitical conflicts that we're seeing at play have to deal with semiconductors, with that struggle for compute, right? Taiwan has always been a small country, but a big player on the global stage because of its ties with China, of course. But it's even bigger in 2024 because that's where the bulk of our semiconductors are produced. And so you're already seeing that tussle between China and the rest of the world over Taiwan because of its ability to produce compute. And so it will be interesting, as you mentioned, Brian, to see how that struggle plays out, not only between countries, but between industries, between Bitcoin and AI as well. So shifting gears a little bit, we had some interesting polling coming out this last week in regards to Bitcoin and crypto voters. Dylan, if you could pull up this recent chart. So this is fascinating. I think crypto has always been a libertarian space, right? But there's been a lot of people involved in the industry who maybe leaned left in past years. So much so that in 2020, you had 43% of Americans who owned crypto voting for Joe Biden and 39% for Donald Trump. So it was fairly evenly split, but Joe Biden, a Democrat, had an edge over the Republican candidate. However, in the last few years, you've seen a complete shift where Trump today has the support of 48% of crypto owners, whereas Joe Biden has the support of only 39%. So Trump was down by 4 in 2020 amongst crypto voters. Now he's up by 9. So that's a swing of about 13 points. Brian, what do you make of this new polling, and what do you think is driving this shift in political allegiances among people who own crypto?
Yeah, it's really insightful, interesting polling, and I don't know that we have the. Well, I think you can infer from that data a few things. One is that there are single issue crypto voters out there. I think some of those voters are baked into that cake that we just saw, and they've made the determination that Trump is better for them than Biden. Now, that shouldn't come as a surprise for anyone who's been paying attention to the SEC under the chairmanship of Gary Gensler, or the relentless attacks on not just Bitcoin, but digital assets in general by Biden surrogates like Senator Elizabeth Warren, among others. Their administration's reports and fact sheets and executive orders on this, on subjects relating to crypto, have been just unabashedly hostile. They said in some of their documents they want to limit or eliminate Bitcoin mining from the United States. I mean, it doesn't get much more hostile than that. So accepting as true that there are some single issue voters who are just going to pay attention to digital asset policy, given Trump's evolution on the issue. Now, Trump was hostile. He had tweeted nasty things about Bitcoin in 2019. He did an interview where he said he thought it was a scam. His administration tried to regulate self-hosted wallets, which caused quite a stir. So I think the industry viewed him as bad on digital asset issues when he was active on them at the end of his presidency. However, in the intervening years, he himself has sold NFTs. He recently gave an interview where he softened on the subject and said, he likes the dollar, but a lot of people like Bitcoin, so he would allow people to pay for things with it or trade. And he said he's had some fun with digital assets. So he's obviously shifted. He's evolved on the issue. His politics are flowing downstream, I think, from culture. He sees how popular these things are. And we've seen polling data, aside from what you just saw. Morning Consult and Coinbase have published materials suggesting that, between 18 and 45, I think it is, the numbers are pretty strong in terms of the portions of that population that own digital assets. And it's across party lines. It is across demographic lines. It's across ethnic lines. It's really an interesting thing. And I think it's indicative of younger voters in general, who I think are becoming a little bit less partisan maybe than the prior generation, and a little bit more sort of libertarian leaning. Now, that makes sense coming out of COVID, where the government has been more aggressive maybe than ever in terms of, restricting people's freedoms and things. So I think digital assets sort of play nicely into just where we are in our recent history and kind of how the population of younger voters are thinking about things. But I think, just to sum up and kind of get to the point, like, Biden has been unabashedly hostile to digital assets in general, and has been more enthusiastic about a central bank digital currency. And their policy proposals seem to be advocating to stifle private sector digital assets, to bolster a public sector digital asset, and try to have that as the last man standing. It's terribly unpopular, and I think these voters are seeing it. And so, to the extent you're a single issue voter on digital assets, it's a pretty obvious choice. You have Trump, who has sort of moved to the middle ground of, I'll let the market decide. And you have Biden is still in this camp of just open hostility. That's a pretty easy choice for those voters. And so it's interesting to see the data. But when you think about the kind of what has happened in recent years, it's actually not that surprising. Like, what is surprising to me is that there are still like 39% of crypto holders who would pick Biden over Trump. That means obviously there's other issues they care about more. I mean, that's what it signals to me. But I don't know. Those are my thoughts on that. Trump has been moved from bad to neutral, and Biden has started at bad and remains at bad on these policy issues.
Right. It's interesting how much of his anti-crypto agenda he's actually outsourced to those two people you mentioned, Senator Elizabeth Warren and Gary Gensler. Senator Warren In particular, she is the self-appointed generalissima of the anti-crypto army. And some have called her President Warren because of the fact that it's clear in Washington, it's sort of an open secret, that she was given major influence in the Biden administration to appoint her staff and people who are closely aligned with her politically to help staff the White House in its economic agenda and in the Treasury Department as well. And that's why I think you've seen such a hostile posture from the Biden administration towards crypto, because President Biden, I think he's probably a really nice old man who probably didn't really care or know all that much about crypto going into the White House. But the people who did are Warren's former staffers, and they have had knives out for crypto since day one. As you mentioned, the White House issued an executive order to investigate the potential of limiting or eliminating Bitcoin mining. In addition to that, we know that since day one, Senator Warren has wanted to implement a CBDC. The White House issued a report that placed, quote, high urgency on research to investigate building a CBDC. And then you have Gary Gensler, of course, as well. And Gary Gensler is fascinating because he taught blockchain classes at MIT, but he's been a pretty big critic of Bitcoin, not Bitcoin so much as other crypto assets during his tenure. You know, we saw this last week that the House of Representatives really kind of held his feet to the fire because the SEC has, quote, been arbitrary and capricious and demonstrated a gross abuse of power in their treatment of crypto companies. Those aren't my words. Those are the words of federal judges across the country who are looking at the SEC's lawsuits against crypto assets and crypto companies and saying something's not right here. This seems like a politicized agency. I'm curious, Brian, at what point do you think Gary Gensler and Elizabeth Warren will actually actively hurt President Biden on the campaign trail? Obviously, he's seen them as assets in the past. Do you think he still sees them as assets going into the next few months as the campaign cycle really heats up?
Look, I think both campaigns are seeing some of the data that we're seeing, which suggests that they are deeply unpopular amongst key voting demographics. I think this election will be, to an extent, about younger people, about people crossing party lines or independents, more libertarian-leaning people, particularly minority men who are particularly interested in digital assets, and who, statistically speaking, based on data we're seeing, are one of the demographics that are becoming disillusioned with President Biden and potentially switching over to President Trump, among others. But those are some of the areas where these candidates are going to have to speak to those people, and this issue matters to them. And we just saw from the data that we put up on the screen that it's not what Warren and Gensler are doing is not working. It is unpopular. It's also bad policy. It's bad politics, but it's also bad policy, and is really affecting people's lives. And we're seeing, private companies and individuals unafraid to speak out against the government in ways that I don't think we've seen in prior generations. When I was in law school, the typical sort of way these things play out, where if an agency decided to put a target on your back, an instrument of the government, your most likely counsel from a lawyer was going to be cooperate, find a way to reach a settlement that is going to be, hopefully not that harmful. In other words, kind of surrender gracefully. Now, people and companies are suing the government every day, publicizing it, talking about how the government's abusing their power, and they're winning. Now, we helped with the lawsuit against the Energy Department, which was trying to probe Bitcoin mining companies because it was outside of their authority. We sued and we won. We had a temporary restraining order, within hours, and an order where the judge recognized that the government's behavior was arbitrary and capricious, grossly misleading, I think was some of the other, language they used. I think what we're seeing is some rogue government actors here abusing their power, straying, coloring outside the lines, going outside of their statutory authority pretty brazenly, perhaps because they were used to kind of the old paradigm of people kind of surrendering gracefully to their government because the institutions were so trusted. And that trust is going away because they're abusing it. Some of the agencies are just abusing it, and people and companies are really emboldened. So we're kind of in a new era right now of how people interact with their government. It's fascinating. I'm glad to see it. I like to see people stick up for themselves, especially when they're correct. And I guess more to the point, they're losing in the court of public opinion, and they're losing in courts of law as well. If you're the president right now trying to get reelected, that's a bad look for you. That is totally unhelpful. I just don't see him really doing anything about it, So I think that's just going to be points on the board, probably for the Trump camp heading into this election.
Yeah, which is really too bad for the Biden camp because, as we mentioned, there's many Democrats, in fact, more Democrats than Republicans who own crypto, according to recent polling. So it's a complete own goal at the end of the day. So with that, we'd like to wrap up our episode today with a new segment called Draft Tweets. Brian, can you give us your idea behind the inspiration for draft tweets in this fun new section we'll do going forward?
Yeah. So Greenpeace USA, our wonderful friends at Greenpeace, who always protest outside Bitcoin mines, they've issued a new report, which I will put big air quotes around. They issued a report about, how it's Bitcoin mines, which are like 1% of the energy market and are all electricity, and more than half of the compute to power the Bitcoin network is renewable energy. But for some reason, Greenpeace, we know the reason. They received $5 million from a donor to attack Bitcoin because he produces a digital asset that he wants to compete with Bitcoin. So he paid Greenpeace to basically attack Bitcoin. So they issued this report that is full of just brazen falsehoods, complete nonsense. It's unprofessional and silly looking. And as part of their release, they put out this power map, which, let's put that on the screen if you have it, Dylan. This is the power map. I am very proud to have made the power map. I am even more connected than I knew I was. And when I saw this and I looked at all the names on it, obviously there's dozens, if not 100 names or something on this thing, who they're calling basically the puppet masters of Bitcoin, just pulling the government levers for the benefit of Bitcoin. And the first thing I thought when I saw it was that Charlie Kelly meme from It's Always Sunny from the Pepe Sylvia episode. So Greenpeace has lost it. And what I was going to tweet, I typed up the draft, but I didn't send it. I might not send the tweet, but maybe I'll say it on a podcast. My draft tweet was going to show the report and then say, to be honest, I would read every word of a mainstream media think piece about how Greenpeace morphed from environmental conservation organization into arts and crafts club for mentally ill communists, because that's pretty much where we're at right now. But I am honored by my place on the power map. And I just have to thank my family, the Lord through whom all things are possible, and of course Greenpeace for this great honor of making me a puppet master of Bitcoin. What a funny event this week. I don't think anybody's really taking it seriously, which is the right way to approach that, because it's just so goofy. But that was very eventful. So glad to see our enemies are still punching, even when Bitcoin is soaring.
Right. And it seems every time they try to punch, they end up punching themselves in the face.
Oh, they stepped on a rake big time. Yeah.
You love to see it. I think what was fascinating about Greenpeace USA's reaction to this was they were community noted. So on Twitter or X, they have community notes that can fact check in real time the claims that different people and organizations are making. And it's a crowdsourced fact checking mechanism, right? So they were community noted hardcore, where multiple claims they made on their tweet and in their report were called out in real time. And how did Greenpeace react to this? They blocked all of their good faith critics, people like Daniel Batten, who is the most genteel, civil person I've ever met on Twitter, and also a great defender of Bitcoin and really effective at highlighting its environmental benefits.
And he's an environmentalist, and I think he may have even been a member of Greenpeace at some point.
Yeah. He did some volunteer work for them, from my understanding, and they blocked him. And so I've also heard that Greenpeace itself has sort of distanced themselves from Greenpeace USA because they're making such an embarrassment of themselves. So shout out to Greenpeace USA, and Brian, jealous of you for having made the power map. That's an incredible honor.
That's right. That's right. Very proud. Very proud.
And it was a beautiful acceptance speech too. Beat anything I saw at the Oscars the other week. So I think that about wraps us up today. Is there anything you think we should touch on before we conclude?
I think that'll do it for this week's pod. But you know what? Subscribe, follow us on social media. I'm at MorgansternNJ on X. Subscribe to this Rumble channel. Subscribe to our YouTube channel for the Peer-to-Peer Policy Podcast. And we will see you next time.